Robert Shiller, who recently won the Nobel Peace Prize, the Nobel Prize in Economics, excuse me, the prize for economics, rather, is not, he said he's not quite yet sounding the alarm, but in many countries, said stock price levels are high, and in many real estate markets have risen sharply, and this could end badly, and this can be the second bubble that can pop and destroy the world economy. He says, and he does have concerns because we're still here in the United States. We're still very weak and vulnerable. But then he also talks about Brazil. Now this is an important point. Now Brazil is an emerging market that is growing and booming faster than God knows what, right? And the real estate market in Brazil is what worries him. He said a recent conference he attended in the country, the sharp jump in housing prices has been attributed to the growing middle class and the positive economic development. Very similar indicators to what happened in the U.S. housing boom in the early 2000s. The world is still vulnerable of another bubble, he reminds us. And he says the fact that the Federal Reserve is basically buying bonds, and I love talking about economics. I don't talk about it enough, but I'm an econ person. So when the Federal Reserve buys bonds, for folks out there who don't know, they release cash, or they basically print money. Buy a bond, print the money. Buy the bond, print the money. And this type of printing puts more money into the economy. And because for the past 2 or so years, the Feds has tried everything to sort of push more money out there, I don't think we're necessarily gonna find, or we call it quantitative easing in economic terms. It's pumped. Let's get the numbers right here. $85 billion into the economy each month. The extra liquidity has been joined by the UK and Japan doing the same thing. So the worldwide market is becoming over liquefied, and usually that causes inflation. But because the reason why we don't have inflation is because we were in such a deep recession, so we haven't really come all the way out of it yet. But it concerns people because what happens when the Fed decides to cool their spending, or they decide to, quantitatively restrict or buy bonds or sell bonds rather to decrease the amount of money in the money supply. Then we have other issues that can really bring the market down. So this is something that we should watch and be very, very concerned about as we move forward.